Hey traders, in today's video, we're going to look at the 4 different types of trading outcomes, along with a technique you can use to take your trading to the next level called conversion by immersion. So let me get the disclaimer out the way. Click that like button while you're at it, and I'll see you guys in a couple seconds. Hey gang, Akil Stokes here. If you are new, I am the Chief Currency Analyst at TradingPower.com, the premier online educational source for trading education. And thank you for joining me for my weekend review video. We're going to jump right into it today. I mentioned earlier, we're going to talk about the 4 different trading outcomes that are possible, along with a technique you can use to help take your trading to the next level. But first, in order to build up to the point I want to make, I want to show you guys a recap video from Wednesday's live room session where we broke down a simple pattern trade on the pound dollar. Now, I still think the breakout is to the bullish side. So if you're a breakout trader, and I think that because we're above structure, above our B leg, if you're a breakout trader, I'll tell you what, make sure it's in your rules, but you can do something like this. You can easily, you can get, what's our ATR here? 14, 15? You can easily get a stop loss right below the 54 even handle. I think we can call that a safe place. You could easily get a stop loss below the 115 even handle, 154 even handle, excuse me. Say we double bottom down here. Set yourself up with a risk of about this, right? You can look to play this as a breakout. But you can certainly take a Fibonacci extension from swing low to swing high here. Should get a 127. Wait for it. Yep. 127 right there below an even handle number, below 156, right? So I would say that 156 flat, that we can realistically expect an extension if we break out. We can realistically expect an extension to 156 flat. Now, where does that line you up at? Watch this. Risk, right? We talked about our risk. Let's make this a little, make this actually a better color. Talked about our risk being right down here, right? Check out our reward. What are we looking at here? About 5 to 1. I can only count as many fingers as I have, so hopefully it's not more than 5. 2. Oh wait, I got 2 hands. I can count to 10. 3, 4, about 4 to 1, 4.5 to 1 risk reward. Guess what this means, guys? If you were to take this trade, and let's not, just let's say you're trading one position size, you weren't doing anything fancy. If you were to take this trade 4 times and you only won once out of those 4 times, you would be in profit. I would tell you this. Most of you are probably better than 25% traders, right? This is trading. Finding these opportunities where we can afford to be wrong over and over again. We don't have to have a really high win percentage. This is trading. Now, some of you are probably saying, right? Let me ask you this. Some of you are probably saying, well, Akil, that's a little, does that profit level look a little risky to you guys? Are you a little nervous about shooting for, what if it hits structure and then breaks back down, right? Any of you guys on the edge? I'm kind of getting that sense because people get a little quiet. I'm like, this is an awesome opportunity. And you're like, yeah, well, probably wouldn't shoot it up there, right? You're risking 40 to gain 170. Well, check this out. You can easily do this, right? Take target ones right there. Or take your, I don't care, take your full position right there. Who cares? Look at that. Even if you just play for a move across the channel, guess what that is? A 2 to 1. It's still good. It's still good. It's still good. So I ended up getting filled that trade, but as we went into the evening, the close of the New York session, I actually closed myself out of that trade for a loss of 7 pips. Now, I recorded a video for our syndicate members explaining why that was. I don't think I need to go over that here, but as I woke up the next day, I saw that the trade had played out exactly how I wanted it to. Unfortunately, I wasn't involved. Now, just because I'm a professional trader doesn't mean I don't have emotions. And in fact, I think I have some recorded footage of my reaction the morning of. All right, so maybe that's not how I reacted, but you guys get the point. A lot of emotions go into trading. And again, even as a professional trader, someone that has been doing this for years and years and years, when I woke up and saw that the trade played out exactly to my profit targets, yet I didn't have a chance to get involved, I was angry. I was frustrated. Why, Akil? Why? Why did you cancel out your trade? You should have just held on to it, right? Because of course, hindsight is 20/20, and we always make the right decision in hindsight. Just ask some of my followers on the trading forums. But seriously, after I sat down, I always go through a review process of each trade, meaning that I look back at the trade, I ask myself some questions. Did I do everything right? Did I do everything wrong? And really analyze the trade. We call it looking at the tape. No different from a quarterback going back into the film room on Monday morning, reviewing the game film from the day before. And when I review this tape, I asked myself, not was it a winning trade or a losing trade, but was it a good trade or a bad trade? And I think winning and losing and good and bad is something that many traders confuse. A lot of traders often think that a good trade is a winning trade. A bad trade is a losing trade and vice versa. And in reality, they're all completely different. There are 4 different outcomes of a trade, and you'll see them right here on your screen. There's a winning trade, one that makes you profit. There's a losing trade, one where you take a loss. There's a good trade, one where you followed your rules, and there's a bad trade, one where you broke a rule. Now, you're always going to have to choose one from the left side of the column, one from the right side of the column. So when you do your evaluation, all right, was it profitable? Was it not profitable? Boom, that goes strictly to your P&L, that's all. What matters most in the form of consistency over time and really growing as a trader was, did I execute a good trade or a bad trade? And again, a good trade, we're going to define that as one where you followed your rules. A bad trade is one where you broke your rules. Trust me, you can have plenty of profitable trades where you've broken your rules, and those have to be considered bad trades. If you consider those to be good trades, well, you're just opening yourself up to the chance that you're going to break your rules once again in the future. Now, winning trades or losing trades can also be good trades, as in this case. Yes, I didn't make any profit off of it, but it was still a good trade because I executed my plan perfectly. And although I didn't financially benefit this time around, in the long run, remember, trading is a marathon, not a sprint. In the long run, I know that following my rules, trading my system, trading my plan that has that positive expectancy, that's going to allow me to earn the consistent profits that I want to see. Again, trading is a business. Trading is a marathon. It's any single trade that we take today, winner or loser, is going to have very minimal effect on the bigger picture. But if you develop habits, especially bad habits, you're going to start making mistake after mistake after mistake. And before you know it, you're sabotaging yourself and you're sabotaging your system and really sabotaging your chance for success. So I wanted to bring that up to you guys. Give me 1 second. I wanted to bring that up to you guys because I think it's very important. And more importantly, that's something that we preach to my training course clients all the time. Now, what made me kind of forget about the trade this morning was reading a quote from one of my 12-week transformation members. I'm going to bring it up on the screen here. from Victoria. And Victoria wrote, if I can find it, she said, smiley face, smiley face. There we go. She says, well, pound dollar looks like it didn't break out this time, but I stuck to my plan. Even when my mentor got out and made me question myself, didn't get greedy, and I hit my target one for 66 pips. Very happy this morning. And this is exactly what I'm looking for out of the traders that I work with. And it's not even about the 66 pips. I think she ended up making 80 something pips in total, but it's not about that. That's good. Don't worry. We all like to stuff our pockets a little bit, but the part that I took out of this statement was really I stuck to my rules even when my mentor got out. And we talked this morning about how it's a tough thing. A lot of these traders look up to me. Obviously, I'm their mentor. I'm the one holding their hands through this trading journey. But, it's a fine line. Just because I'm their mentor doesn't mean they should be doing everything that I'm doing. We still have different trading styles. They could be very similar. You could be taking bits and pieces of what I do and implementing it to your own strategy. But there's going to be these slight differences. And sometimes it's really easy to see that mentor, to see that trader you're looking up to, or even that trader on the trading forum that you're following, to see them exit a position and not do the same thing. Oh, he knows, there must be something he knows that I don't. I don't really trust myself, so I'll just follow what they did. That's normal. That's common. So to see that this trader said, even when my mentor got out and made me question myself, I stuck with it. I stuck with the trade, and guess what? I was rewarded. It paid off not only financially in the form of 66 pips, but mentally, this is going to be one of the biggest trades that she takes, meaning that there are going to be instances like this in the future. There are going to be trades that really have those emotional pulls where you're questioning yourself. You're thinking, should I get out? I can't stay in this. The market's been going sideways. I got to exit right now. And instead of making that mistake, Victoria is going to pull back on these past events and say, well, remember that pound dollar trade? Well, I thought about breaking my rules. I thought about following Akil. I thought about giving in to emotions, and I didn't. And I was rewarded. Pleasure indicator up there. I was rewarded. So I'm going to do that again. And what she's doing is she's building very, very good habits for the future. And that's what we want to see out of these traders. This is a good sign. I work with a lot of traders. I usually get the feeling whether a trader is going to end up being successful, a failure, or kind of just a break-even type trader. And this is the mentality that successful traders have. So once again, thank you for that, Victoria. That lifted up my spirits. And again, if you want to send some of those pips my way, for giving you the idea in the first place, I'll kindly take that. But all seriousness, while we're on the topic, I actually spoke to a trader this morning who said, hey, I've been trading for 5 years and I'm kind of stuck at break even. I win a lot, I lose a lot, and I end up right in the middle. And I said, well, first of all, congratulations. Most traders go broke within maybe like 6 months, if that. So to make it 5 years without blowing your account, it means you're doing something right. It also means that there are a few mistakes in there. And part of making the change in your trading, going from consistently average trader, consistently small drawdown trader to consistently profitable trader, it takes 3 steps. The first thing you need to do is you need to admit to yourself that trading isn't going your way. And that's extremely hard. We have a lot of pride. I remember when I first started off, it was never my fault. It was always the euro. It was always it was Draghi's fault this time, the tsunami over there. It was everything but myself, the trading platform, the broker, you name it. So the first step is really admitting to yourself that, hey, something is wrong in my trading. The second step is finding out what is wrong in my trading. That can be the difficult step, and that's what we're here to help with. Now, I want to do a quick shameless promotion for my friend Charles. Charles Miles is a former Trade Empower client. He now works, successful trader now, works with us, works with our struggling traders. He has something on our website. Just go to www.tradeempower.com. On the homepage, it's right there in front of you. Fill out the trader assessment, guys. What it does is it assesses your current state of trading. He reads through each and every one of them. He'll reach out to you through email. If you want to set up a time to talk to him, he can call you if you want that. If you don't, there's always, just answering the questions will allow you to figure out a lot about yourself. But I recommend every trader do that. That's the step that Charles took to get to the next level. That's the step that yours truly took to get to the next level as well. So 1, admit that something is wrong. Something is wrong with my trading. 2, find out what is wrong with my trading. And 3, this should be the simple one, take action, right? You've got to do something about it. Doesn't mean with us, doesn't mean with another educational company. It could just be you figuring out what's wrong and saying to yourself, I'm going to make a change. But you've got to take action. You've got to find someone to help you through that time, or just be disciplined enough to get through it yourself. But you got to take action. Something has to change. And the easiest way to make a change is from a technique that I like to call conversion by immersion. So I didn't make this up. I heard about it from a good friend of mine, Bob Facile. We've been running leadership programs bi-weekly at a local university, and this is something that he brought up. But it's conversion by immersion, meaning you have to immerse yourself in this life. You've got to be all in. You've got to take a leap of faith. Leap of faith. I think about it like getting into the pool. Back even probably to a year ago, you're at the pool. It's a cool day. You kind of dip the toe and you're like, ooh, cold. I don't like that. And then you dip a little bit more the foot in. Ooh, cold. And you're slowly just dipping the foot in, slowly working it up to the leg. And before you know it, time is passing, and you're really not doing anything towards your goal. The best way to do it is to sit back, close your eyes, jump off the side, put yourself in the air and say, guess what? In a half a second or so, I'm hitting this water full out. I'm going all in. And you hit the water, splash, right? And you get that initial shock. It's cold. But guess what? After a few seconds, you're used to it. It wasn't that painful. In fact, I would argue to say that it's more painful to continue to dip your feet in that ice cold water slowly than jumping right in, just getting that shock and dealing with it. So when you take action, when you take a training course, when you decide what you have to do, you've got to be all in. You cannot be one of those people that say, I'm gonna try a little bit, like it's a hobby. You can't dibble and dabble. You got to want it. You got to have passion for it. You got to want it, and you got to go get it. And if you're not willing to do that, you need to quit right now. You need to stop trading right now, because this life isn't for you. This industry will eat you alive if you're not fully dedicated. Trust me. It will eat you alive. You got to take it seriously. You got to go all in. You got to immerse yourself and say, I'm going to get better, and I'm going to do everything that it takes to get better. So that rant went on a little longer than I thought, but I hope that was powerful, guys. And lastly, I just want to address a question that I got on TradingView. About consistency. Let me just bring up the question really quick. All right, so the question I got on TradingView reads like this. It says, Akil, can you speak about consistency? I started my trading this year and in late April, and in the middle of August, I was up around 60% with no money management. That's fantastic. That's amazing. Just one lot, but then I had a month of about break even, but now it's just loser after loser after loser. I'm down 12%, and it's really starting to affect me. Before, I had strings and strings of winners and a few losers here and there, but now it's just the last 2 weeks. It's been 13 losers, 2 winners. It's really starting to get to me mentally. I hope you can speak about that. I followed my back-tested plan like a baby seal will die if I break one of my rules. And I don't. But still, the sudden downfall is very hard to cope with mentally. Kind regards. I'm a student of yours, and I love your work. You are the best. I learned to trade from your course after trying about everything out there. So thank you for the shout out, Thomas. I definitely remember you. And one of the things I can say is, you mentioned, we always talk about the different steps you can do to figure out if your system is failing or if you are failing. And you mentioned some of the things we want to go through. We want to go through our back testing results and review. We want to review our trades and make sure that, try to determine, am I making a personal mistake in my trading, or is it the system? And we want to go through that evaluation process again to try and figure out, is it the markets or am I doing something wrong? And one of the things that stood out to me is you said you got up to 60% by August, and now you're hitting kind of a slump. Something that I like to do is I look at the big picture. I know you haven't been trading consistently as long, but once you've been trading consistently for a while, you start to know where you should be at. You start to know what your average yearly return is. So let's say, for example, your average yearly return is 50%. You make 50% return at the end of each year, and you start off the year at 60% the first half of the year. Well, you're above that average return already, so it shouldn't be that much of a shock if you come back down to earth a little bit. And I say that because we may know the destination, which is what our average yearly return should be, but we don't know the course we're going to take to get there. If you're making 50% every year, you could make 50% by August and then do nothing the rest of the year. You could have a horrible first half of the year and then catch fire at the end of the year. And you gotta stay grounded during those hot streaks, not get too confident and be like, this is gonna be that 100% year. Yes. And you also gotta stay confident during those losing streaks. While you're in drawdown, you gotta say, okay, this is just the market or my equity curve correcting itself. Things are gonna get back to normal. We had a great example of this in the syndicate this year. And the syndicate is a program where Jason and we've shared every single trade that we've taken. So for all you guys out there that like to leave nasty comments about, oh, show me your brokerage statement and give me your password, I'm not going to do that. But we have full transparency in what we do in the syndicate program. And we started off the year with a bang. I don't have the curve in front of me. I'll throw it up in the video, but I believe we started off the year, we went straight up to 40% by June. We went straight up to 40% by June. Now, I didn't know what to expect from both of our combined trading. I'm typically about a 35. I typically average about 35 to 40% a year, about 3% a month. I'm not sure how that would have been with Jason's trade added in. We kind of hedge each other. But 40% in the first few months, that was massive. And we're looking at each other. We're like, all right, good, but this is not going to stay. We're not going to continue this. We're not going to bring in 120% for the year. I mean, it'd be great if we did, but let's be realistic. And one of the things that we prepared for mentally is that drawdown. We said, okay, at some point, we're going to calm down off of this heater. We're not going to keep this hot streak alive, and we're going to fall back to earth. We need to mentally be prepared for that and make sure we're consistent, make sure we're following our rules during that. And lo and behold, during the summer, we just got destroyed from, June, July, August, really until September. We had about 3 weeks of just bad trading. And we didn't blow an account or anything like that, but we took a slight drawdown. We could not get new equity highs. And during that time, we have all types of thoughts in my head. Man, what am I doing wrong? Is it my system? Is it the market's fault? And, what I did was I always took time to think about, okay, well, we got off to such a fast start. This is just the market correcting itself. It's no different from an uptrend putting in an outside return, right? You got a bullish trend, there's going to be some relief. And this is just the relief. And if I trade through that relief, if I follow my rules, I'm going to get back to normal trading. And that's what we did. Lo and behold, the last month, we've made over 1,000 pips. We're back up to about 60% for the year, and we're rolling again. The problem is that so many traders quit during the hard period that they never get a chance to see those return, I guess, for lack of a better term. So I hope that helps you out, Thomas. Again, just look at your system, make sure you're not doing anything wrong. There are circumstances where you do need to adjust your plan, but with only a slight drawdown, you're not at that time yet. If this continues for, say, a couple quarters, which would be 6 months, then it's time to reevaluate your plan and see if you need to make any adjustments to the market. But right now, you just need to grit your teeth. You need to eat it. You need to grind it out. Say to yourself, I had an amazing first half of the year. Even if I give some back, even if I give 12% back right now, I'm still sitting at 48%, which is an amazing return. So I hope you guys enjoyed that. This is a different type of weekend review video, but I think it's a lot of knowledge bombs have been dropped. Do me a favor. I've got a goal. I want to reach 15,000 subscribers by the end of the year. I'm at about 12,000 right now, and I can only do that with your guys' help. So every time you like this video, every time you share that video, every time you subscribe and encourage other traders to subscribe, that helps me out. So do me that favor. Do those 3 things and help me out. I've got a little kid crying in the background, so I've got to go. But until next time, traders, plan your trade, trade your plan. Best of luck in the markets. I'll see you.
Chevy Silverado, the highest ranking pickup in its class, made of high-strength steel for high-strength...